In this video, we will explore how gold and silver prices are affected by economic shifts. We'll cover the key factors that influence precious metal prices, such as inflation, interest rates, and how geopolitical events and global crises can cause price fluctuations. We'll also dive into the role of central banks and their monetary policies in shaping price trends, along with industrial and technological factors that impact the demand for silver and gold. If you're looking to understand these dynamics and make informed investment decisions, stay tuned for this video. Top of form, bottom of form. Gold and silver have historically been seen as safe haven assets, especially during times of economic uncertainty. Investors often turn to these precious metals when traditional markets are volatile. But what exactly causes their prices to fluctuate, and how do broader economic changes impact these metals? 1. Understanding the basics of gold and silver pricing. Supply and demand. Gold and silver prices are primarily driven by supply and demand. However, their supply is relatively stable, with mining production remaining consistent over time. Intrinsic value. Unlike fiat currencies, gold and silver have intrinsic value, making them more stable compared to other assets in the long term. Role in financial systems. Central banks hold gold reserves, which often influence its value, while silver has industrial applications, adding another dimension to its demand. 2. How economic indicators influence precious metals. Inflation. When inflation rises, the purchasing power of currencies decreases, leading investors to seek assets like gold and silver to preserve value. Historically, both metals perform well during inflationary periods. Interest rates. Higher interest rates can decrease the appeal of non-yielding assets like gold and silver, as bonds and other fixed-income assets become more attractive. Conversely, lower interest rates often boost demand for precious metals. Currency fluctuations. The value of gold and silver is often inversely related to the strength of the US dollar. A weaker dollar makes these metals cheaper for foreign investors, increasing demand and driving up prices. 3. Geopolitical and global events. Market uncertainty and crisis. Political instability, trade tensions, and global crises, like wars or pandemics, tend to push investors toward gold and silver. During these times, the metals are seen as safe investments. Government policies and trade agreements. Tariffs, sanctions, or major changes in trade agreements can impact global trade flows and economic health, causing shifts in precious metal prices as investors assess the future. 4. The role of central banks and monetary policy. Gold reserves and central bank buying. Central banks, especially in countries like China, Russia, and India, buy gold to diversify their reserves, which can influence global prices. Increased buying often signals an upcoming economic shift. Quantitative easing, QE. When central banks implement QE, they flood the economy with money, which can devalue the currency. This drives up gold and silver prices as investors look to hedge against potential inflation or currency depreciation. 5. Technological and industrial factors. Silver's industrial use. Silver has a significant role in industries such as electronics, solar energy, and healthcare. Economic growth in these sectors increases the demand for silver, directly impacting its price. Gold in technology. Gold is used in high-end electronics and space technology. Advances in these industries can also influence demand for gold. 6. Investor sentiment and speculation. Stock market volatility. When stock markets experience volatility or sharp declines, investors often seek the relative stability of gold and silver. The metals act as a hedge against declining equity markets. Speculative trading. Gold and silver prices are also affected by speculative trading in futures markets, where investors bet on future price movements. This can lead to short-term price spikes or declines. Gold and silver prices are influenced by a myriad of economic factors, from inflation and interest rates to geopolitical uncertainty and industrial demand. By understanding these relationships, investors can make more informed decisions about when to buy or sell these precious metals. Tracking economic indicators, central bank policies, and global events can provide valuable insights into future price movements for gold and silver. Now we will talk about the future of gold and silver in a digital economy as the world shifts towards a digital economy, with cryptocurrencies and blockchain technology gaining ground. The role of traditional assets like gold and silver is evolving. While these precious metals have been trusted for centuries as stores of value, questions arise about how they will fit into an increasingly digital financial landscape. Will they remain relevant, or be overshadowed by digital currencies and new technologies? 1. Gold and silver's historical role as stores of value. A time-tested asset. Gold and silver have long been used as hedges against inflation and currency devaluation. Their intrinsic value and limited supply have made them reliable stores of wealth during economic uncertainty. Comparison to digital assets. While gold and silver have physical presence, digital assets like Bitcoin are decentralized and stored electronically. Understanding how these two types of assets compare in a digital age is crucial for investors. 2. The rise of cryptocurrencies and blockchain technology. Bitcoin as digital gold. Bitcoin is often referred to as the digital equivalent of gold due to its finite supply and role as a hedge against inflation. Some investors are now choosing Bitcoin over gold as a safe haven asset, leading to competition between the two. Decentralized finance. DeFi. The growth of decentralized finance platforms allows users to invest in assets without traditional intermediaries. This trend could shift attention away from gold and silver, as investors explore blockchain-based assets. 3. The role of gold and silver in a cashless economy. Physical versus digital ownership. With more economies moving towards cashless transactions, the challenge arises on how to integrate gold and silver into a fully digital economy. Gold-backed cryptocurrencies and tokenized silver offer potential solutions, allowing for fractional ownership and easy transfer of these assets. Gold-backed digital currencies. Several platforms have emerged that issue digital currencies backed by physical gold, providing the security of gold with the convenience of digital transactions. These innovations could help precious metals stay relevant in a tech-driven economy. 4. The continued demand for gold and silver safe haven in times of crisis. Despite the rise of digital assets, gold and silver are likely to retain their appeal during periods of global crisis and market volatility. The tangible nature of these metals provides a sense of security that digital assets may not. Industrial and technological use. Silver, in particular, will continue to play a key role in technology-driven industries like solar energy, electric vehicles, and electronics. Gold is also critical in high-tech applications, which could support demand in a digitalized economy. 5. Inflation and currency concerns in a digital world. Digital currency risks. The increasing use of digital currencies by central banks, CBDCs, and the potential for hyperinflation in fiat currencies may drive more investors towards physical gold and silver. Precious metals are seen as a hedge against the risks associated with central bank-controlled digital currencies. Protection against volatility. While cryptocurrencies can be highly volatile, gold and silver typically offer stability. As more people become wary of cryptocurrency risks, traditional precious metals may see renewed interest. 6. Gold, silver, and ESG investing. Sustainability considerations. With the rise of environmental, social, and governance (ESG) investing, the environmental impact of gold and silver mining could become a more significant concern. However, the development of more sustainable mining practices and recycling methods may allow gold and silver to align with ESG standards in the future. Green technology and silver. As global economies invest more in green technologies, silver's role in solar panels and batteries for electric vehicles may drive up its demand, securing its place in the future economy. While the digital economy is rapidly expanding, gold and silver are likely to maintain their relevance. Their historical role as safe haven assets, combined with new innovations like gold-backed cryptocurrencies, will help these metals adapt to the digital era. Additionally, silver's industrial uses in technology and green energy will ensure its continued demand. As the world shifts, investors must navigate the evolving landscape, balancing traditional precious metals with emerging digital assets. Stay ahead of the curve. Learn how gold and silver can still play a vital role in your investment strategy in a rapidly changing digital economy.